Good morning, everybody. Happy Friday. First Friday of the first trading week for 2026. Big week. Very, very big week indeed. How's everyone's trading been? Well, listen, it depends on how much you're holding. You know, what are you holding? How many contracts? And remember, on a Wednesday, you got a 3-day swap. Good morning, Saucy. It was good for me yesterday. EU sells. Very nice. Very nice indeed. I only had a couple of trades on yesterday. When did you take the EU sales, Saucy? Like London session or US? Oh, okay. I can see it pretty much already coming in. Let me come down to the M15. Oh, nice. Okay, wait. During the stream. Nice. Let me just change it quickly. So we get London's time. So you took them in and around like this area. Swing, what instrument and how many lots? Morning, Wiz. Good to see you again. It was great having you on early this week. Because if you've got $200 commission on the prop side, $5 if it's on MT5. I said, sorry, where did I see for my apologies, Swing. I didn't see your comment above. When did you get into that trade? Do me a favor, Swing. I would recommend reaching out to the support team on the ticket. So go to the website, seacrestmarkets.io, opening up a ticket and providing them with the trade ID, your account number, and any verification that they require. And we'll look into that. Good morning. Good morning. Happy Friday. Happy Friday. So, yeah, Saucy, great trades. I took it like 3 days ago. So, okay, definitely open up a ticket, please. Speak to the team and we'll get it sorted for you. We'll have a look into it. No worries at all. Good morning, Ryan. All right, so Euro sales, really nice trade, Saucy. What made you get into that trade? Was it analysis that we discussed? Did your edge tell you? Was there something that you liked about it that was based on our conversations plus your edge? I'd love to hear. I mean, it's a pretty nice sell. Obviously, supply was in control. We had this low to initially break. We took that. We come back in. We respected. And then we could have got in here. So even if you had got in earlier or later, there was definitely a sell. Like I know you got in during the stream. So it would have been between... I'm just trying to see my timeline. It would have been between about here and here. So you would have taken this initial move down. I like that move. However, this is a better move for me. I would have got in about here had I have looked for the sells in euro dollar. So that's realistically where I'd be getting in. I'd have my stop above the structural highs. 10, I'd probably round that up a little bit more, 11, 12. And then I'd be looking to target initially, kind of see where we are on the daily open, see what's to the left. We've got that structural low to the left as well. So initial targets would be this low. And then I'd want to see how price reacts. And as you can see, price really reacts, comes back up. Now, depends on trade management, right? Because had you have got in here or here, or wherever you got in, had you been quite aggressive to protect your position and run your stops break even plus positive, you would have been stopped out. Nice. Very nice. So, yeah, it's one spot free, break even potentially had you been managing that trade aggressively. If you're looking to target -25, -50 ATR, or at least to see price overextend into those areas based on the ATR levels, you know, you're running at 2.6 or 2.6 to the lows, depending on stop size, and it's trading open at about 2.3. So really nice short. That's just on the M15. Now, bearing in mind, we can, of course, get really intricate on that level and go down on a lower time frame. But it is FX. So, like I said, I tend not to trade at FX as much anymore. But if I was, that's exactly what I'd have done. I break it down every single day. Supply side in control on lower time frames, trading into the higher time frame levels, which we've been interested in. So I'd be just trading the front leg of momentum. So I'd be looking at lower lows, lower highs, seeing how supply is respected, seeing how demand is actually breaching or being respected, where orders are being built up as well. And then I'd be looking to get in. Obviously, you can see some significant volume nodes on euro dollar up and around those levels as well. So that could be a number of things. You know, that could be buyers trying to get into the market. It could be sellers obviously trying to overweigh the pricing. But overall, there's a lot of volume activity up there. Maybe we're looking at this initial sell-off. This initial sell-off was, you could consider it as trying to trap buyers, because if there was a lot of buying intent up here because of the fact that we've respected this demand level to the left, we could look for early buyers. And if we've got early buyers coming in, what the market's going to want to try and do is really pressure those sellers, really pressure those buyers and sell off. Because what that sell-off will do is potentially suggest or highlight that that buyer is wrong, or the buyers are wrong, the block of buyers are wrong, and it will pressure them to hold. And if they don't hold, it will collapse the price because they'll have to sell out, especially if their stops are underneath that low. Like if you think about this, if their stops were here from an entry of here or here or here or here, or ideally around this node area about 116.80, then if their stops are down here, they would have been triggered. But it doesn't look like they were. It looks like they were lower down. So we've had obviously a retest of that level. Buyers have tried to continue pressuring into the market. Sellers have overweighted it, and it's capped to the downside, and it's continued to trade off. So really, really nice move. Really nice move. It wasn't going to be the first pair I covered this morning. It was actually going to be gold, because gold was lovely. So yesterday I highlighted in gold the probable for the lower move or the continuation to the downside, and that didn't materialize. And what happened is we then broke above previous area of supply. We obviously saw that the high was weak, and we saw a continuation. And once we broke out of that downside move, we were expecting that exponential moving average to the upside, which is rising as well. We've got some significant volume here to the upside. Then longs came into play, and now we're trading pretty much inside that expansive wedge. And I don't know if many of you have got kind of comments on why markets done that. But I think I made some notes about how I was considering the great rotation out of risk off into risk. And yesterday we had ADP private payrolls better than expected. So private sector employment increased by 41,000 jobs in December. It did miss the forecast of 49,000. So the 41,000 was a miss on the 49,000. And there was a revised loss of 29,000. So remember I mentioned yesterday, just in general, about non-farm payrolls and the revisions. We've seen it again on ADP, because there was a revision of 29,000 in November, which confirmed a significant cooling in hiring, okay, private hiring. Today, obviously, we've got non-farm payrolls, expecting modest net gains to be kept at around 4.6% on unemployment. but definitely watch out for non-farm payrolls, the Goldilocks report. So what is the impact? The narrative of the US economy is slowing. It does potentially warrant interest rate cuts, but I don't think the US is going to crash into a recession. I believe it's a soft landing, if anything. But let's see if there's a confirmation today with a bid for risk assets. How do you see the Supreme Court impact on markets today? I don't at the moment. Pro Trader 2809. So let's talk gold. Prices dipped yesterday, obviously, initially. But obviously we saw that trade up into 45s, nearly 44.80s. Now, Treasury yields on the back of this, the 10-year. Now, this is important. It might not be important to some of you, but you need to know it. The 10-year hit 4.2%, which definitely has increased the opportunity cost of holding gold. Now, of course, if we transfer across into silver, we saw silver obviously get hit by domestic markets, trading at around, $77 an ounce globally, obviously dropping over 8,000 on the flash correction. Now, how did that happen? There's deemed to be institutional profit taking. So funds are moving back into equity markets because obviously we've seen the rallies across the S&P, the Dow, the Nasdaq, the FTSE, the DAX, etc. And overall, on a gold equity perspective, I'm still seeing this hedge. I'm still seeing people moving into equities, as you can see with the index inflows. But I'm also seeing funds flow into gold. Now, that suggests they're really trying to balance and hedge out their risk exposure. They want to be bullish equities. They want to be bullish risk. But also there's something in the back of their mind with the data that's suggesting that there's a softening in the markets. On Thursday, I mentioned the transition away from most assets into cash, and it pretty much showed that was what was happening on Wednesday. However, Thursday's pretty much kind of said that I was wrong, or that I was right for yes on Wednesday, but I was wrong to believe that was going to continue to happen. So markets, of course, showed me there, and that's the point about trading. As a trader, you have to have your ideas coming into the market. But as Linda Rasch says, the majority of the time, most people go wrong in their trading because they're analyzing throughout the day. Now, as a trader, what you need to realistically be doing is, yes, you've analyzed where the levels are in the markets, but you need to be realistically doing that before the open. So when you know the levels of what you're trading in between, it doesn't matter whether you need to be long or short. You're just adapting to the ebbs and the flows of the market. So you're not actually actively analyzing. So you're not actively analyzing. You're actively reacting to your proactive analysis, right? So you might think market's going short, but you know that there's specific levels that it's trading into. You then switch that overall view and go, right, that level's been hit. I'm now going to look for buyers stepping into this market, maybe some form of traps on the sell side, and we're going to look for confirmations to get long. And that's what happened with gold yesterday. So we looked for continuations to the downside in the shorts. We came into specific levels. We reacted bullish off of those levels. We then got confirmation to go long. And that's it. Actively reacting. I love that. But it's being proactive in your analysis, but reacting to market conditions. And as a trader, you could change your mind 5-10 times a day. It doesn't necessarily mean you're over trading. It doesn't necessarily mean you're chasing the markets. It all comes down to, have you prepared your top-down analysis on the instruments that you trade? And are the markets showing you confirmations or the hands to get involved? That's it. So if I was looking at gold right now, again, bearing in mind, I'm probably going to be sitting on my hands today. Non-farm payrolls, I've traded enough this week. I'm quite happy just to sit on my hands. Something we'll do next week is I've got a few ideas on executions, live trading. hitting the markets with every single one of you inside. And I've got a few ideas on how to make that really interesting, but I'm not going to bring that to the fore at the moment. I'm in discussions with the management team at Seacrest to really gauge whether we can do that. If we can, genuinely, just to clarify, it is not being done. So if I can achieve what I want to achieve with this, it's really exciting. I'm excited about it. I might not look excited about it, but I am. So at the moment in gold, like I said, I'm not going to be trading today. What's gold doing? Consolidating. Lower highs, higher lows. I'd like to see a confirmation of a breakout, either to the upside or the downside. Now, this is on the M15, so we will see greater weighting on a 4-hour or a daily. But realistically, I'd be looking to see a breakout either side. Now, bearing in mind this is bullish, so we could initially see consolidation into non-technical term, the pointy end of this wedge, which is known as the pennant. We could get a fake breakout to the downside, still respecting that previous point of demand, which is obviously the reason for this high trying to fail. We then trade higher, trap sellers, and we continue to go long. Now, that always going to be kind of based on non-farm payrolls. I think markets are going to be waiting and consolidating ahead of that data because it is deemed one of the highest macro points for the beginning of the year. Again, I think it's going to be overinflated because we've got seasonality in the hiring. And ADP numbers, even though they were short, and despite the fact that they were weak, it did show a good number. It was still weak, but it was a good number. So let's see where gold trades out. At the moment, I'm consolidating. I'm not trading it at the moment. Let's look at the DXY, because the DXY, of course, is pretty much euro dollar in a basket. So everyone that shorted euro dollar yesterday, even though we had the weak ADP numbers, the dollar index posted a 3-session winning streak. So that's the third trading day that it traded higher. It traded near 98.60, targeting 99 as the resistance, which is a level that everyone was looking at. Obviously, we're trading above 99 handle right now. Obviously, we really wanted to see that. But again, covering the fact that it's pretty much made up, it's not this exact number, but it's just over 57%. It's like 57.23% roughly, or 7 something. 50, basically 53. Let's call it 53. 53% of the DXY is made up of euro, right? So it's euro dollar in its purest form. So if you're long the DXY, you're short euro. But obviously euro dollar in this particular pair remains the weak link. It's struggling to maintain that 116 level. The Eurozone data continues to lag behind the US services sector's resilience. So in fairness, yeah, nice. In fairness, at this moment in time, your outlook is, I know my levels in the DXY. I know my levels in the euro versus the dollar. If I'm short, I remain short. If I'm long the dollar, I stay long the dollar. And that comes down to uncertainty. But again, heading into non-farm payrolls, even though US data is weak or weaker, and there's potentially a soft landing, remember the US dollar is a safe haven. If they're not going to be going into the dollar, they're going to be going into yen, Swiss, fixed income. They may be moving it out into T-bills. They might even be parking it in cash. But then you've got obviously the exposure of rate differentials, currency denominations, currency weakening. So you really want to be looking at where money's going to be flowing next. I think we also saw that really in Bitcoin. I just saw a comment about Bitcoin. But yesterday, sideways consolidation, against the fact that we've got a strengthening US dollar. BTC is trading up at around 91,000. It did dip to about 89,600. So I think realistically, with the strategic news of the US Treasury, because obviously they've officially established the strategic reserve, obviously this week, And I think it will probably provide a long-term regulatory floor for the asset, even if it's choppy short-term. So DXY for me, listen, 99 is a big round number, okay? So 99.00. There's going to be a lot of volume up at this area. There's going to be buyers trying to trade into that level. There's going to be buyers looking to take profits. There's going to be sellers trying to come into the market to bring the level back down, which means inherently that you want to, of course, trade into the euro. So think about that, because you can't obviously directly trade on the DXY. You have to look at a currency exposed into it. So realistically, the best pairing will be euro on this one. Yeah. Gold has been delivering a good price action. I think, yeah, well, so I don't know if anyone's watched it. I'd love you to watch it and let me know your comments and feedback. We interviewed a trader from Seacrest Markets who is funded. He's had over 8 payouts with us, and he only trades gold, and his favorite session to trade gold is Asia into European session. Doesn't really trade the US session. And like I always cover, gold is the most traded instrument across the prop industry. There's a lot of volume trading through it. Oh, my aircon's turned off. So in terms of the S&P, again, consolidation, there was some opportunities for shorts yesterday. Obviously, you can see the market's rebounding overnight, but you can just see that rising channel into this area. Fantastic watch. Yeah, definitely appreciated. There's one, I think there's one coming out next week. So I've done 2 trader interviews this week, and one was with, you'll see his name. His name's Unhan, gold trader, based out in Indonesia. And the other trader was with a gentleman by the name of Abdullah. He was originally from Pakistan, lives in the UK now. And then again, another good trader. So no wicks, clean price action. Well, if you trade Heikin-Ashi or lines, you're never going to get any wicks anyway. Look, if you trade, wait, why don't you trade point and figure? I bet many of you have never traded point and figure. There's probably only a couple of people in this stream that are old enough to even know what P&F is and how you trade it. I am lucky enough to know what it is, and I'm lucky enough to never have traded it, ever. What I use in my stock trading and my portfolio investing is these. I do not care about candles and longer term. I just look at the OHLC. So sorry, let's go back to the let's go back out to the daily. Is anyone in any trades at the moment other than the euro dollar shorts? No, no one is in any trades. No trades for me. Until next week. Any reason, Wiz? Are you waiting for non-farm payrolls, or have you just made enough this week that you're not trading anymore? What is point and figure? Is it worth talking about it? Do you think it's going to benefit anyone? Up to you. Market's in a tight range. Yeah, it is. Yeah, I think the moves have come. We had that expansive move Monday, Tuesday, and into Wednesday, and they were really quite nice. Like if I break down into the M5 quickly, we had Look at Monday. We had Monday's moves. We had Tuesday's moves. We had Wednesday's moves. And then obviously we had Thursday's moves as well. And then we corrected late in Thursday. So if I, just because I like to trade it on, oh, excuse me, -5 on EST. So trading into Thursday, we had the corrective moves. Very corrective. And now we're just ranging. Like, if I look at where the markets are now, and I'm thinking, okay, what, based on the M5, what's the probable play? That was the last high that got broken. This is the support area, support range, demand range that we could be looking at holding. But look at the moves, right? It just, there is some form of liquidity building right here, whether that's the buy side or whether that's the sell side. There's a lot of liquidity being built in here, and it's pretty much an equal play in the market. You can see here we've had a lot of volume traded into the market around 69.20s, so 69 and 5th, and it's not doing anything. So the volume's exchanging hands. Pretty much a lot of opportunities are being built up in the market ahead of non-farm payrolls, and it's not moving anywhere. So why would you, unless you're building a long-term position, when you know your levels are in the market, all you realistically need to be doing is waiting. So if you look here, this is where price reacted from on Thursday. So from there, you could have started to look for shorts. But what time was that? If you're trading a futures account, you wouldn't really want to do that because, of course, you've got to close out by EOD. If you're holding a CFD account, which is a massive advantage, then you could have held that through the night and capitalized on that quite significantly. I mean, how would you, on the M5, how would you realistically do that? It's not the easiest. I mean, you could look at some form of consolidation because we just had that sell-off. I'm sure down on the M1 we can get in. We'll take a look at that actually, because I don't think I've been on the M1 since I started these live streams with you. I think that's a conscious effort. But had we looked at maybe seeing where WAP came in, we could probably look to get short around here. Again, stops. That's the last point of area where liquidity probably kind of swept, like a stop and reverse. So you could look to maybe have your stop above here comfortably, maybe trading it a little bit higher just because, you know, stops are nothing on this. And then running it. You know, you've got over 2R. So if you're hitting 2R, well, there you go. There's your 2R, give or take. Let me clean it. You're going to be like, oh, that's not 2R. That's 1.92. There's your 2R. But what time's that? 20 to 9. 20 to 9 US time is deep in Asia, means spreads are probably a little bit wider, so you're probably not getting. I do, Wiz. I'm not saying there is or isn't. I'm not saying there whiz too much noise, or that there whizzant too much noise, but I'm just saying that I know some people trade it, so we can definitely take a look at how we would have traded that level on the M1, because all you're looking at from a supply side perspective is to see where volume kicks into the market and to see if there is anything. And I don't know. I don't know how many people trade bear flags anymore, if I'm going to be completely honest. But as a technical confluence, you know, you've got that kind of bearish flag. You've got, look, higher lows being printed, and then we have that break. We have that rejection. Stop above here. I don't like it personally. I prefer this, much prefer this. And again, if you're looking at the M1, just to filter out the noise of the M5, just to see where we actually get that close. Like we get that break here, fails. Get that break here, fails. Fails to trade higher. So it means supply is still in control, but buyers are battling. We then have that nice close below. We can, of course, have our stops covering that structural sweep or that higher sweep, which obviously fills, some people call it imbalance. So you've got that fill of imbalance, which if you actually look, you've got that demand area here. It's only a point of demand. So we've got that point of demand. It then becomes resistance. We've got that area of sweep. It fills that level of imbalance. We've got a price efficiency now, So we can now trade into the POC, which is the point of control, which we wouldn't have seen yesterday because obviously volume only comes in. It only shows you today's volume. But if you were holding this and woke up overnight and then we've switched over into the new day, then of course you've got your POC down here, which is your point of control. And again, your point of control is distributed across this. So that's where realistically, you know, markets are going to continue to trade in and around. But I mean, there's a lot of volume being built. A lot of volume being built around this POC. So it will act as a magnet. Yeah, same with high impact news, NFP, CPI. I'll stay away from. Does anyone trade DAX at all? Yes. Oh, yeah, you do, don't you? Let's take a look. DAX had another good day. Look at that. So 148 points up since when I mentioned the smashing of 25,000 on the DAX. So Wednesday was a historic day. We broke above a key level 25,000, right? Which is just up here. We gapped above it. Expectations initially for us to see if we could fill that gap, but we didn't. There's only a small gap there. Obviously, you can see it on the daily. But we traded back up to what, 25,000? Like we reached 220.67. Oh, okay, pro. No, don't trade. I trade the Mag 4. Nice. Why not the Mag 7? Do you follow, Ryan, do you track the Mag 7 when you're maybe trading indices? So do you look at how, you know, Microsoft will react to the opening markets and to see how that potentially will direct the strength of the US indices at all? Do you kind of look at the correlation on that or not? I know some people do. US 500 gold, euro dollar, BTC. Most liquid assets. Nice. So we've got some indecision on DAX at the moment. Look at that. Huge doji. Huge doji. Big doji at the top. Spinning top doji is what we want to call that. Spinning top. Let's go down into the 4 hour. So we're starting to get that rounded bottom. Or rounded top. Sorry, not rounded bottom. We're starting to get that rounded top. It's still bullish. We can see it's still bullish. But it's just... You know, we broke out that high. We had huge moves to the upside. We had that retest of that high here. Nice. You know, broke out, retest, continuation. Really, really nice. Really, really nice level. We go down into the M15. We're just going to get more clarity. More clarity. You know, you can see, look, higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. You'd be a fool. You would be a fool for trading. I don't trade Tesla. Do you hold Tesla? Like, do you actually hold Tesla in your long-term portfolio? Because I do. I'm just asking. And don't worry, if you tell me you don't, I'm not going to get out of it. I'm only long on, not in the market on Mag 7 yet. My portfolio is long only. I'm not shorting stocks. I don't short stocks. I used to short stocks, but I think I touched upon it maybe Monday or Tuesday's live. I do no longer like trading short. I could get exposure through puts if I needed it, just as a hedge, but that's more so to mitigate overall downside and hedge out any risk, but not directly shorting stocks. And there's one key reason I don't, but I don't talk about it publicly. but I just no longer short stocks. So where are we? What was this? This was Thursday. This was, let me just go back to London time because it's -5. I just want to show you the DAX in serious times. It's not serious times. In times that we actually trade it. So we've had that break of the high. That was that gap up, which traded into the 25,000 level. Now, up at this level, you can see that we had volumes in the point of control just above 2,500 at 64s, spot 32s. So we came back and retested. We tried to close below and failed. We then traded back up. So what we're seeing now, and this is realistic after we've taken all-time highs, it's not going to just cause a V reversal, and it's not necessarily just going to continue trading to the upside. We're going to have exhaustion in the markets. Nice. Same as me, Ryan. Smart man. So when markets rally, we're not necessarily going to see continuation to the upside. We're not necessarily going to see a V reversal to short. We're going to see consolidation, whether that be an accumulation for further upside or whether that be a distribution to trade short. So based on the Wyckoff methodology, right? Realistically, now we're going to consolidate. We're going to see profit taken. We're going to see positions being built. Buyers up at these levels are going to be looking for value. Are they getting value at this moment in time? Or do they need to wait for value to be traded lower? Do they need markets to come lower to get into an area of discount? Because right now, they probably see us as trading in premium because we've traded up at all-time highs. And that's where the euphorias come in. Let's get long 25,000. Let's keep pumping this price. But right now, what they're seeing is the switch. And this is what happens. You'll see the switch. Everyone's like, right, the big boys are trading into this level. We can continue running this up. Let's get 25.5 on the ticker. Let's keep trading. Let's keep trading. But this is where we start moving into the premium of the leg. And you get your retail professionals, some of your retail, your institutional, your professional. They'll start looking at this and going, right, extensions, exhaustions, let's start profit taking. Let's not short, but let's profit take. And then people will start taking their profits out of the market. You'll be seeing exchanges of moves on the buy side from your strong hands to your weak hands. Your weak hands will then take the loss. Buyers will start stepping back in to start building a position. And then your sellers will pretty much be looking to now knock this price down as well. So for me, consolidation is the only thing I'm seeing on DAX at the moment. Now, bearing in mind, this is the M15. Again, very similar scenario to what I mentioned earlier. We could either see breakouts like this to the upside. We might see a fake move to the upside. We then come back in. We then consolidate and trade lower. We could break up, consolidate, fake move, trade higher. So they're your kind of three initial moves from a break from the upside. Alternatively, you're going to get your breaks into the kind of correction of the wedge. We then trade lower, first move. We then get this. Alternatively, we get this. And this is something that basically means, there's no interest in getting short or long either side of the market. And we just have to adapt our technical analysis. And that's where TA like this, where you're drawing on your trend lines, your equidistant channels, they can be deemed as subjective because they're expansive, they're elastic, they adapt to movement of price. And it's also subjective because, for example, you're pinning this on your lower highs of the wicks. Well, it's almost subject to the broker's wicks as well, because of course it will depend on how they're presenting price. Do you see a directional correlation with DAX? I don't tend to focus on the correlation. If you look at the way indices move, so first of all, look at the DAX. Okay, in terms of the constituents inside DAX, what is their international exposure, right? So what is their international exposure to the US, for example, right? So like the FTSE 100, everyone's like, oh, that's a great barometer of strength for the UK. It's not. The FTSE 100 couldn't be further away from being British, other than the fact it's under the LSE, right? So if you look at like revenue exposure on the DAX in terms of the US, like what we call the US proxy, you might call it silent, but 22% comes from the US, from the DAX. 10% comes from China. If you look at domesticated Germany, it's only 18%. and then the rest of the world is 50%. So if we put it in numbers, like financial numbers, for every 100 euros that a DAX company earns, 22 euros of that comes from the US. So the correlation from the DAX to the US is there because it's highly correlated and it's highly sensitive to the likes of the US GDP. So you can be long the DAX and long the US if you want to, but then you've just got double exposure. So you're overexposed. Does that make sense? And it'll be the same for stocks, because I'm waiting for your answer. It'll be the same for stocks. So, for example, if I was to look at a very big telecom stock in the DAX, which is Deutsche Telekom, they've got a majority stake in T-Mobile in the US. So, yeah, no worries, Pro. So if, for example, you look at the bulk of their value, the bulk of their revenue and their growth is derived from US strength because of the T-Mobile side. If you look at, do you think cable? I'll look at that, Luendo, very quickly in a minute. So if you look at, for example, BMW and Mercedes, their estimated US exposure is about 25%. Now, if the US is their primary market for their margins on their SUVs and EVs, then we have to understand if the demand in the auto sector is continuing in the US. So it's the same with the FTSE. So if you really want to, like, if you look at the FTSE 100, like I said, 70% is the US, 10% is Euro, 20% is domestic, right? So if you're going to be long the FTSE, you're long the US. And that's why my biggest portfolio holdings in the stock market, I'm primarily in the US. So all of my screeners, my bottom up, top down analysis comes, and my whole approach, like if I was to, I don't know if it's going to show you because I'm not sharing that screen, but and probably you're not even interested in stocks in that respect. So I won't even break it down. If you're interested in stocks, I will hold for Seacrest Markets just a stock session one day, just so that you can see it, because on the CFD side with CFD Markets and the fact that Seacrest Markets obviously has a CFD broker, as we expand our instrument range, we'll of course consider looking at equities, your most volume-based equities. We'll look at expanding our instrument range so that you can trade equities as well with us. That would be incredible. You know, similar patterns from profitable traders in Seacrest Markets you can share. First of all, Luffy, I would say watch Unhan on the funded trader interview. Then watch Abdullah's funded trader interview. These two, there's a couple more that are coming out as well. I've got about 4 or 5 people on the waiting list. And if you are a funded trader with Seacrest Markets and you've got payouts, please write in. Send it to marketing@seacrestmarkets.io. Say that you want us to interview you. Let us know your account number and your account name. We'll do a review and we'll see where you're at. We'll see if it's right for you. Because what we don't want to do is expose you to something and put too much pressure on you. So have a look at their trading patterns, bearing in mind these people, like Abdullah, who's coming out on the next trader interview, he has been a funded trader with Seacrest Markets since 2024. It's now 2026. Okay. So at the very minimum, he has been funded with us for over 12 months. He's multiple payouts. Unhan, multiple payouts. I've got traders that are live and funded with us, and they've been getting payouts with us since 2023. Huge. Yep. So look at their move here. So we're just getting that indecision. So let me quickly go over to cable because I know there was a comment on cable. Wow. That's all I can say. Wow. Yeah, definitely. So next week we're going to host, we've got 2 guests next week. We have a trader from Uzbekistan, and we also are looking at getting on a review company. So one of the big review companies we're talking to at the moment to join the stream as well. And we have got guests lined up. So I'll leave that to my marketing team to get them on. But I love getting people on. I love sitting on here with other people, sharing analysis, discussing ideas. I mean, I'm happy to sit on this all day talking, trading, and doing what we need to do. It won't matter to me whatsoever. So these are the highs, right? These are the first highs in cable that we want to be noting on. So let's look at the last real structural points of demand, and then from there we can pin that out. So look, you could even move that up just because of that area of imbalance, right? So these are the levels that we're really keen on. So these are the structural points. Maybe add this one in because it was the last low before the high. And these are the breaks. So, okay, how have I drawn those levels and why have I drawn those levels? So if you look here, where are the breaks coming from? They're coming from those points of structure on a supply side or a demand side. You know, and then we've got these internal levels internally, internal points of structure. And these are where like your intraday momentums and your order flow is kind of coming from. And I say order flow very loosely, okay? But your intraday momentums. Now here, okay, where did this structural break come from? Now that's quite weak. So I'd probably deem it as this one. So at the moment, I'd be looking for that. And I'd be ideally looking at seeing some form of break here, come back, retest, maybe look for shorts from that move, or alternatively, I'd look for another retest. Then I'd look to get short, and then I'd just see the continuation to the downside if that's where the market wants to go. So lower highs, lower lows being printed. We've got this point of demand. This structural high hasn't been taken. It's created a lower high. So this low realistically is now potentially weak. So I'd be looking at seeing if we can take out this entire leg or the most of it. What's the most profitable session? Well, profitable is such a subjective word, you know. From a gold perspective, Asia, if people are trading Aussie dollar, you want to be looking at what session is open on the cross. So from an Aussie dollar perspective, the Aussie market's open in Asia. The US is not, right? Aussie is very good during Asia session. Yen crosses during Asia session. So dollar yen being a major, you've got your dollar yen during Asia. They're very good high volume instruments to trade during Asia. Gold, Aussie crosses, yen crosses, okay, during Asia. You could, of course, go out into the Nikkei if you want to, the Hang Seng. Obviously, you could also go out to the ASX if you really wanted to. But when it comes to London, okay, so let's look at the London European session. You have the FTSE, you have the DAX. Again, FTSE exposure, whatever. You have Euro Sterling, not the nicest instrument to trade. But the Euro's open, the Sterling's open, the dollar market is not. So you want to be trading instruments that have the market open, the volumes open in that marketplace, right? If both markets are closed, there's no point trading it. So when it comes to the US session, what markets are open? European markets are open. UK markets are open. The US markets are open. So that's where you're going to get the most volume because you've got euro and the dollar trading. You've got the pound and the dollar trading. You can still trade Aussie dollar yen crosses during those sessions, but there's going to be lesser volume in those markets. Wanted to know your personal, yeah. Primarily because of the US news drives markets, yep. Moves are real, good volatility to capture, yep. I don't trade Asia because it just doesn't fit with my lifestyle. I'm not going to sleep less than 2 hours a night. You just can't function. So I primarily only trade European and the US sessions. European will also obviously factor the UK markets, but European and US sessions, and the majority of my activity is now in the US sessions. And then from a stock perspective, it's either end of day or opening. No worries, Luendo, on the breakdown on cable. Let me just quickly go down even lower on it, just because I'd like to show you intraday moves. So we had that reaction from that supply side at 135, just over 135 and a half, so 135.60s. Now you've got a couple of, this is the 30 minutes, sorry. So first of all, we're looking at, are we getting supply respected demand failures? So we do have a change of character. We can see that the high is trying to go, but it's just wicking, so potential sweeps into the level. So it's a failure to break to the upside. We then have that last point of true demand fail. There was no reaction into this until pretty much the absolute extreme. So tail down here, that fails. That area of support or area of demand then turns into supply. So that's now resistance. On the 30-minute, we get that logo. That's not the cleanest level, so don't ask me why I've done it like that. I just quickly tapped it on to show you, but I'll clean it up quickly. So we then have demand fail. We have liquidity built here. Why? Because that high is weak. Why? Because that low failed to get taken. It tried, failed. We then come in. That high has now been taken, so this high is strong. So what happens? We get logos, liquidity built, equal lows. We sweep the liquidity. We then fuel the move to the upside. We take out that weak high. We come back down. Why is demand holding when supply is in control? We come back up. We retest. We could then get short on the 30-minute. And so talking about noise, we've just smoothed out a lot of that noise by trading on the M30. We're not going to get as many trades, but does it matter? No, it does not. So if we were looking to get short on the M30, once we've had that huge injection of liquidity into the market, now bearing in mind this is only the FX markets, it's not the true liquidity of the entire industry, it's just realistically the broker. So this is IC markets. Stop wise, again, stop join it above here. Join it above here. This is a strong high because we've taken out the low. So 1 to 1 there, 1 to 2 here. And if you're holding that short, there's 1 to 5. Now, bearing in mind, this is the 30-minute time frame. So that's a really nice time frame. If we go down into the M15, there's going to be a bit more noise. It's a bit more intricate. Doesn't necessarily mean there's going to be the trade that you want. You might actually find out that you've smoothed out the noise and you've waited for a trade to come in lower down, and that's okay. Maybe you're looking for a scale in, so you're already in. But then this is where you look for your scale in. Okay, right? You know, supplies in control. We can see demand's failing, supplies in control. We're going to add to that. We're going to look for a short from here. You know, we've got our supply getting respected all the way down. We've got a supply here. You know, your volume showing that there's a lot of volume in the market. Overall supplies in control. And then we're just looking for shorts because, again, the DXY is strengthening, the dollar is strengthening, the safe haven instruments are strengthening. We're looking to take risk off of the table. We're looking to get short the pound, the euro, and so on. So nice continuations. If I quickly come into today's PA before I move into Bitcoin for the last few minutes of the session, we have lower highs being put into the market, and we have higher lows. So we've got the higher lows. We have the lower highs. Again, this is all subjective. This is just a guide to show you what the market's doing, right? But from a supply side, why is demand holding and supply is in control? It's because we're trading in a range. We're correcting. We're consolidating. We're then looking to see where price moves. Okay, so supply fails, supply respects, demand fails. We're coming into extreme of demand. So we're ranging. You can see this range clear as day. So I wouldn't be looking to get short until we take out structural lows. And then I'd be looking for shorts from here, from here, from here and here. Sorry, that last demand, that last supply box didn't draw, but from here or here. But once that interacts, I'd be looking for the move away. Now I'd be looking for the move away from here, and I'd be looking to get short in here. That was if I was trading today. I'm not trading today. I wouldn't be looking to take shorts on this. And if you are looking to take shorts on that, that's entirely up to you. I would not recommend trading until later today. I'd wait for the moves on non-farm payrolls. Depending on the way the move comes out, I'd be looking to fade the reaction of the move. Alternatively, I'd be looking for the news to settle down. And then I'd be looking for the overall direction that implements from that area to get in. Let's quickly take a look at BTC because there's a potential move coming in. So let's have a look. BT move, potential buy, resistance zone on the 1 hour chart. Okay, so we're looking for potential longs down at this level, around 89.74s. So we have to be a little bit careful, but obviously I'll explain. Now, obviously, this is an area of demand. We've got a negative ATR 50, which is pretty significant on the move. We could see profit taking in and around that level. We've got a lot of resistance previously and support coming in. So I would look, for me, if I'm just buying this, I'd be looking on a higher time frame to get long. You know, we've had that sweep of the high here. We've taken out all of that internal structure. We've swept the lows. Have we respected? Yeah. So we are still respecting that overall supply, which took out, which took out this low. All of this liquidity was then taken. We respected that supply side that hadn't been retested. We failed to move down. We've come back up. Sellers tried to take out buyers. Buyers have kicked the market back up. And then we sold off. And that's realistically because no one was continuing to buy and sell side pressure was taken over. So this is definitely somewhere that buyers might want to step in because it's an area of discount. So if I was trading on the M15 or the M5, I'd be looking at seeing maybe a little bit lower. Then I'd want to see demand respected. And then I'd want to see that kind of move. So yeah, there's definitely an opportunity there. If I come down into the 1 hour, resistance, yeah, you've got that whole area there, and it was there's 2 points of control from previous trading days. Sorry, I just left the 60-minute chart. So you've got the point of control around here, and then you've got the point of control around here at 9100s. Yeah, that's fine. We've got the resistance up here as well as the support, so it's all good. So that's, I'd be looking for the market to develop before getting long. Higher, if you're trading it. If you think that this level is longer term going to hold up and around the 89, and you're looking for us to come back into 125s, but at the moment, to me, on the higher time frame, if I just look out at the daily, we're just trading in that bullish range. Let's see what price does. Nice. Thanks for highlighting that, Ryan. Right, okay, let me just quickly check something, if I may. So, again, as usual, another reset, another exclusive deal, 35% off, all challenges, valid today only, using the code Warner35. I know these have been going like wildfire because, of course, 35% off is pretty unheard of, and that's why we only limit to the first 10 people on today. Limit 10 people only. Like I said, they've been going like wildfire. If you can, whatever platform you're following us on, like, subscribe, turn notifications on, turn the bell on. Make sure that you're aware and keeping aware of any of the videos we drop, be it short form, long form, trader interviews, live streams. Anything that we're dropping is going to be realistically driven from me. So if you like what I do, please drop a comment, please drop a like, please drop a follow. Any suggestions as well, I'd love. So if you've got suggestions on what you want to see, whether that be more giveaways, whether that be more guests, whether that be live trade interviews, whether that be live trading, whatever you want to see, we will try our best to provide and deliver it. No worries. Everyone, it's been an absolute pleasure, an honor. Last trading day of the week, so I won't be here tomorrow. Please tune back in on Monday. So we'll go again Monday live. Can we have Seacrest Markets on Trading View? Maven, we're always trying to better ourselves. We would love that to happen. We'll see. Maybe, maybe not. We'll see. There's conversations, but we don't know. Great discount. Thank you, Ryan. Look forward to seeing you on the inside. Look forward to trading you. Mate, it would be incredible to have you on as a funded trader. First 10 people don't miss out on the code. Yeah, correct. Wow. Joshua Stout up early. Oh, my goodness. You can't sleep. But yeah, listen, these go like wildfire. Looks like they've already gone. There's only about 2 left. So have an incredible trading day. Remember, sit on your hands. Wait for the markets to show themselves today. It's non-farm payrolls. But have an incredible day. Have an incredible weekend. And I look forward to seeing you on Monday's live stream. But that is it from me. So have a wicked weekend. Look forward to hearing what you've done. Look, listen, if you don't follow me, now this is just a little bit of a plug from myself. If you don't follow me, check me out, Trader Warner on X. Let me know what you're doing this weekend. I'd love to hear your stories. I'd love to share what's going on. But if you don't follow me, please follow me and we can definitely have a chat. But have a good weekend. Enjoy your trading day. And I look forward to seeing you on Monday. Have a good weekend.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Secret